Inflation can be a formidable challenge for individuals trying to build and preserve wealth. When inflation rises, the purchasing power of money decreases, which means that what you can buy today will likely cost more tomorrow. In a high-inflation economy, saving money in traditional accounts may not be enough to keep up with rising costs. However, there are strategies and smart choices that can help investors and savers navigate these challenges. This video explores the top 10 must-know facts about building wealth in a high-inflation economy and provides actionable insights to protect and grow your financial resources. 1. Inflation erodes purchasing power. One of the most basic but important facts about high inflation is that it erodes purchasing power. As prices rise, each dollar you earn buys fewer goods and services. For example, if inflation is at 5% annually, a $1,000 income today will only have the purchasing power of $950 in a year. This means that, in a high-inflation economy, it's crucial to earn returns that exceed inflation to maintain your standard of living. 2. Investing in assets that outpace inflation is key. To build wealth in a high-inflation economy, traditional savings accounts might not be enough. Instead, investors should focus on assets that historically outperform inflation. These can include stocks, real estate, and commodities like gold. Equities tend to deliver higher returns than inflation over the long term, and real estate often appreciates in value while providing rental income. Gold and other precious metals have historically been viewed as hedges against inflation. 3. Bonds can be riskier during high inflation. Bonds, especially long-term ones, tend to be negatively impacted by inflation. When inflation rises, interest rates often follow, which can cause bond prices to drop. The fixed interest payments of bonds become less valuable in real terms when inflation erodes purchasing power. If you rely on bonds for income, you might want to consider inflation-protected securities, such as Treasury inflation-protected securities, TIPS, which are designed to rise with inflation. 4. Real estate offers inflation protection. Real estate can be an effective hedge against inflation. Property values and rents generally increase during periods of inflation, making real estate a potentially lucrative investment. Whether you're investing in residential or commercial properties, owning tangible assets like real estate can help preserve wealth as the value of money declines. Additionally, rental properties can provide a steady income stream that can be adjusted for inflation. 5. Diversification helps protect against inflation risks. Diversification is one of the most effective strategies for protecting wealth in an inflationary environment. By spreading investments across different asset classes, such as stocks, bonds, commodities, real estate, and international assets, you can reduce the risk of being overly exposed to one area. This strategy can help protect your portfolio from inflation-related losses in any single asset class. 6. Focus on investments with strong pricing power. In a high-inflation environment, some companies are better equipped to pass on increased costs to consumers. These are typically businesses with strong pricing power, like those in essential industries, healthcare, utilities, food, or those that provide goods and services with few substitutes. Investing in such companies can help safeguard your wealth, as they are more likely to maintain profitability despite rising costs. 7. Keep an eye on interest rates. Interest rates and inflation are often closely linked. Central banks raise interest rates to combat high inflation, which can have widespread effects on the economy, including slowing down consumer spending and investment. For investors, rising interest rates can lead to lower stock prices, particularly in growth sectors. However, sectors like financials, especially banks, often benefit from higher interest rates, so keeping an eye on rate changes is important for building wealth. 8. Investing in commodities can help hedge against inflation. Commodities like oil, natural gas, agricultural products, and precious metals tend to perform well in inflationary environments. These assets are tangible and can benefit from rising prices due to increased demand or supply chain disruptions. Commodity investments can be accessed through direct purchases or exchange-traded funds, ETFs, and they often serve as a protective measure against the eroding value of fiat currencies during inflationary periods. 9. Cash should be managed carefully. Cash holdings are vulnerable in a high-inflation economy because their value diminishes over time. It's essential to manage cash wisely. While you should still keep some cash on hand for emergencies, holding large amounts of cash can be a losing strategy. Instead, consider placing cash in higher-yield savings accounts, certificates of deposit, CDs, or short-term investments that offer better returns than traditional savings accounts, while still maintaining liquidity. 10. Focus on long-term wealth building. During times of high inflation, it's easy to get caught up in short-term market fluctuations or panic selling, but the key to building wealth remains long-term consistency. Focus on investments that can weather inflationary pressures and continue to grow over time. Compound growth, patience, and a disciplined approach to savings and investment are essential to thriving in any economic environment, including periods of high inflation. Building wealth in a high-inflation economy requires strategic thinking and proactive decision-making. Inflation can erode the value of cash and slow down your wealth accumulation, but it also creates opportunities for savvy investors who are willing to diversify, invest in inflation-resistant assets, and manage risks. By focusing on long-term growth, investing in assets like stocks, real estate, and commodities, and keeping an eye on interest rates and market dynamics, you can safeguard your wealth and continue to build it in an inflationary environment. While high inflation presents challenges, it also opens doors for those who are prepared and well-informed.